What do you feel it's taking the most time of underwriters to actually put these things at the forefront?
It would have to come from the top down, I believe. I don't think any underwriter is going to take the extra steps to figure this out on their own. So it would be a directive from the carrier side to look at this type of risk. Maybe if they were pushing for more business for those type of companies that are deploying those technologies, might be a edge in for somebody to invest the time to reanalyze the underwriting.
Where do you feel brokers and producers spend the most time when placing a complex risk?
Talking to underwriters on the phone. I'm working on one right now. I've probably spent 10 hours on the phone. Still haven't found a home for it.
Let's say liabilities start to appear. People are talking about AI liability, and they start to become more and more available.
I think it'll be a lot easier to underwrite these companies. I think things will move a lot faster. I do believe there'll be a discount or a requirement, just like telematics path. I think some of our visual technologies will take that same path, because if you have a tool, use it, and visual technologies are getting cheaper and cheaper and cheaper as time goes on.
Hi, everybody. Welcome to Inside Delegated Authority. Today's guest is Kim Harkobusic, a commercial property and casualty producer at Henderson Brothers, who brings an entrepreneurial lens to how risk is assessed and managed at the front end of insurance. Kim focuses on helping businesses across areas like real estate, cyber, manufacturing, and technology truly understand their exposures and structure coverage that aligns with how they actually operate. In this episode, we'll explore how risk is evaluated on the ground, where broken balance sheets client needs with carrier appetite, and where gaps in information and process can impact the outcome of a placement. Welcome to the show, Kim.
Thank you. I look forward to our conversation.
Thank you. Me too. Kim, right at the get-go, you spend a lot of time understanding how businesses actually operate. How different is that really compared to what underwriters typically see?
I believe that you can't properly insure a business unless you could sell their product or understand how their product works to sell their service or explain it to somebody else. My role as a broker is to explain the risks of each company I work with and each client to underwriters so they fully understand the picture. And that's not glazing over things that are important inside the exposures. Obviously, we're going to be honest about that. But it's also making sure that the carriers and underwriters understand what is being put into place to protect their overall risk, whether that's technologies or safety programs or fleet management. So it's really being the advocate and telling the story of how companies and corporations are utilizing the safety culture they already have in place.
Yeah, learning your customer's business, I would say, is fundamental. And when you're working with clients, how much of their actual risk profile do you feel gets lost, like in the way, before it reaches the actual underwriter?
Well, for me, it doesn't get lost. That's why people work with me, Daniel. But I say it often, I think a lot of times businesses are misrepresented because a broker assumes they know what they're doing or don't ask the right questions to uncover where other exposures might exist, such as in professional lines or needing errors and omissions or directors and officers if they have investors, those type of coverages.
Yeah, I know nothing gets lost under your eyes. And where do you see, let's say, the biggest gap between the real world operations and how risk is assessed in, let's say, in insurance today?
Right now, that's a two-pronged question. The first part is sometimes underwriting gets too much in the weeds and doesn't look at the overall risk. They get hung up on one thing, but that's across the board, and you could say that in any industry. I would say one of the biggest deltas right now when it comes to underwriting and what exists is when, for instance, in construction or oil and gas, they're deploying drone technology and technologies to make the space safer, put more eyeballs on the space, change people from a hazardous job type to a non-hazardous job type. And those nuances of these companies' business and risk profiles aren't properly being communicated to the underwriting teams. Because if nobody tells the underwriting that these things are being used, then underwriting doesn't know how to mix it into the sauce of the premium cost.
Yeah, that's a great point. Technology is evolving. We're applying new things to processes that have been in place for years. And we started to see MGAs grow and focus more on, let's say, niche or specialized industries. That's where they tend to thrive in what I've seen. How well do you think they capture that niche expertise, specialized, and communicate that nuance back to carriers?
That is a sticky wicket. So there are a lot of MGUs and MGAs coming out, specifically in robotics space. For instance, like one off the top of my head, just like you guys, it's called Iron Grid. And all they work with is industrial robot arms. and they put engineering in their underwriting to figure out how much damage these arms can actually do through the forces that are capable of the mechanism. So they can say, if it moves 4 feet, what is the amount of harm it could do to a human? What speed is it coming in? And then what would happen? They run simulations around that. But they only do general liability for industrial robot arms. It's very specific, very niche. And what they're realizing is they're sitting on gobs and gobs of data. And where the circle comes around is every time I bring a new risk or these type of technologies fall on underwriters, they say, well, we don't have enough data to make an accurate decision because underwriting is steeped in gobs of data. The reality is we have the data. It's out there. We just don't know how to package it for underwriting to feel comfortable with these types of risks or
How
comfortable with premium relief because these type of technologies are deployed.
Yeah, that's I would say a mix of evolution and basically doing it in the old ways. How would you say would be the best place to start putting that information into something actionable for underwriters?
That's a really good question. I don't know the answer to that. I wish I did. Right now, I mean, what I'm asking for is for carriers to lessen the premium, I mean, make less money. Their underwriters have to do more work to analyze these things. So right now, the math just doesn't math. Like, why would a carrier do more work to get less money? That doesn't make any sense. And they already have your money. They're not, racing to give it back to you. My goal with conversations like this is to get it out there, to get people talking about it, to get underwriting teams to start having these conversations internally, because the technologies are already out there. This is not talking about 3 years, 5 years down the line. It's today. It's there. And every day, more and more of these type of technologies are getting deployed onto construction sites or really everywhere. And it's not removing the human, it's just taking the power out of the manpower piece. It's changing how people work, getting people out of dangerous situations, removing repetitive motion, giving foremen of job sites another set of eyes and ears to help identify when employees aren't wearing PPE, don't have their harness on, don't have their safety glasses on, don't have a helmet on, to stop claims from happening in the first place. That's the goal, is to not have claims and to keep people safe so employees can show up with 10 fingers, 10 toes, and go home with 10 fingers, 10 toes. And then the product is a quality product that isn't going to hurt anybody when we're done. I mean, that's the goal. And if we have more tools and technologies to help achieve that goal, then the companies that are willing to spend money to deploy them should be compensated for that.
Yeah, and with companies being compensated, growth that starts to happen, programs start to scale. What do you feel tends to break first, let's say on the MGA side, the underwriting discipline, the flow of information, or is it something else?
That's tough because a lot of times to get to the MGAs, I have to go through a third-party broker or wholesaler. So I can't say directly that it's flow of information because there's another human in between me and them. Sometimes the breakdowns at the wholesaler level and not at the MG. They're amazing, but my contact to get to them might not be. I think those who have extreme specificity in what they're going after are probably the ones I aim for the most because they know what they want. They're not getting muddied and looking at risks that don't align. And I'm not going to take them something that wouldn't work for them in the first place, as opposed to people that say, I'll write everything, and then they don't.
Yeah, I would say you see that a lot. That do you do that? Yeah, of course we do that 100%. That's our core, and then you realize it's not their
Nope.
core.
Yeah.
And
People are
but
like, bring the R&D. They're like, oh, no, it's not vanilla enough. I was like, yeah, it's for research and development. It's nothing vanilla about that.
But yeah, that happens. I would say in some spaces, and to your point of really taking the time, understand your customer's business. How important do you feel it's for MGAs, brokers, MGUs to deeply understand the operational realities of the businesses they insure?
Very much so, especially when we're dealing with new technology. Some of my favorite underwriters, they look at the risk from a pure, like, what is the closest thing that exists today before this thing came? Is it an agricultural thing? Is it a watch battery? What's something we already underwrote that looks like this? And then let's look at how the technology is applied to this risk. And does it make it better or worse? And then starting there. Those who come in and look at it from all of the what could happen is the worst case scenario for everybody because we don't know. I mean, we have data that says it. And until you take a risk on it, or we get third-party white paper creators on these technologies to create something, some type of study, it's a big question mark.
Yeah, and then you get back to the day to day. You receive an email with a bunch of attachments, and the underwriting is done on static forms and applications. How do
Mhm.
you feel that's limiting the real way to assess modern risks?
It's very limiting because they'll say, I don't want to write X class code. And you say, why? Like, because this one thing happened in this one very specific situation one time. Okay. Well, what if we talk about all the ways they put safeguards in place that that one thing can't happen again? Would you consider it? And usually the answer is no, by the way, but at least they have the conversation. It's more as new technologies come out, just like if you're a brand new business, they're just going to get stuck in surplus lines and have to go with non-admitted programs for a while until they have a track record of safety and have data and the stats to prove it.
Yeah, and we're obsessed with data, but then we have information flows. Clients sends it to the broker, to the MGA, then to the carrier. How
Mhm.
much distortion or loss of detail do you feel
I mean,
happens along that
Daniel,
path?
we learned in kindergarten that whisper down the alley doesn't work. So, if my information has to make it through 5 people, the story's not getting told properly. That's why I like talking to underwriters directly, even if there's a wholesaler involved. But yeah, no, the flow of information needs to be direct from the broker to the underwriter. If there's too many steps in between there, too much gets lost in translation.
Yeah, it's the reality we're living in. And then visibility. If you whisper down the line, information is gonna get lost. Do you think underwriters today have enough visibility into what's actually happening inside the businesses they insure?
I hope so. Not all underwriters are created equally, but that's my answer to that question.
Yeah, that's fair. And then on the other side, the email, it's static. It's something that's written and it's rarely evolves. How do you see that important risk details get buried in emails, reports, or conversation that actually never make it to the underwriting process?
I mean, there's definitely a lot of emails that fly back and forth in document transfer. I mean, I just had one of my account managers send me another set of policies because I lost it in yesterday's email flow. And I was like, just send it to me again and get it on top. So there's definitely some that gets lost in there. Again, it depends on your process. So I can't speak. For me, I should not be losing anything in my emails and everything should be transferred. But I'm more of a pick up the phone type of human than I am going to send emails, especially on very sticky. And then, once underwriting gets into their questioning of, 500 questions, then the email flow really starts to go. I am surprised that there is no portal that exists for those type of communications where we work on one document or have live feed where we can see in the same space rather than firing back emails and replying all and writing over text. Seems like there should be a better way, like a stack for insurance or Slack for insurance.
There has to be, I would say. And on the other side, I would say that a phone conversation usually saves you like 20 emails. And underwriters, in my opinion, need to be more on that space because that's where actual deals happen and you get the full picture. The other thing, I've seen you're very vocal about how technology is being used in industries, like construction and energy, drones, everything. Why do you think insurance is slower to reflect those changes than other industries?
Well, insurance is like sanding gears no matter how you chuck it, whether it's technology, rolling out a new program, changing a form. I mean, everything moves pretty slowly in the industry in general. So I'm not going to say it's just technology. I think, like I said, it comes back to the data streams and them having enough data to trust and then figuring out what data is necessary and how to package it so it can be used by underwriting. For instance, the drone company has all the data, terabytes of data. Well, what do you want to see? What do you need to see? They haven't had a claim in 9 years. What do you need to see to make comfortable with the risk? That's where I think this current impasse is. It's not that the technology doesn't exist. We've plenty to prove that something makes it safer or the implementations or implementation of these type of technologies and their effects. It's making underwriting at the Travelers, the Chubbs, the Liberty Mutuals, take that and put it into the cocktail mixer and bake it into the premium somehow. Now, I'm not going to say all carriers don't look at it. There are a couple that did say that they have made adjustments to premiums based on these technologies being installed. But again, goes back to somebody like me to inform the underwriters that these things exist and are there.
Yeah, that's a great point. Is that people don't want to implement technology? Is that you don't know what you don't know? And I would say insurance is very conservative. And when a companies adopt technologies, let's say the drones or any type of automation, how often does that actually take to get reflected in their insurance program or in their policies?
I don't think it does often. And the other piece is there hasn't been enough of this technology deployed to show what those savings are yet. Like right now, it's just like you're increasing your overall cost profile. But for instance, let's just look at a pipeline situation. Right now, some human has to get in a truck and drive down the pipeline and inspect it and drive back the pipeline and get back. So right there, that hits general liability, workers' comp. Let's say something happens to the pipeline. Now this human has to drive out there, see what's wrong, figure out what they need to fix it, drive back, pick up what they need, go back out there again, fix the thing. The whole time there's pollution just spewing on the ground. And then they fix the problem, go clean up the pollution spill, and then they return home. Now, if you have drone technology to put in that same scenario, it goes out, it finds the leak, tells you what you need right out of the gate. Your pollution's cut down because it's not spewing out as long. Your time and materials for the auto are cut down because they only have to go out one time. Your person's cut down because A, they don't have to drive the pipeline anymore. Now they just have to go fix the problem. So now we were able to take that one human who's in a class code of like I don't know, some very high class code for workers' comp and move them to a clerical. So just arbitrary numbers, probably like $3 per 100 of payroll to 11 cents per 100 of payroll. That's savings that I can put on paper. So right now I'm working on a white paper with the drone company to take one plant and say, okay, since you've launched your type of technology here, how many hours were saved in man hours? And if I convert those man hours based on workers' comp, here is the delta. Here's the difference. So that's something I'm currently actively working on to show like how these type of technologies being deployed in these spaces can help the soft costs of oil and gas, the soft cost of construction, because they pay a lot of money in insurance.
Yeah, it's I would say high risk industries because you tend to be on the field. And on your experience, what do you feel needs to change for insurers and reinsurers to start incorporating this real operational data into pricing and underwriting decisions?
I don't know, a large wave of figuring it out. I'm not sure. I don't know what's going to make everybody go, I mean, I'm trying to push the conversation along. I'm not doing all of this work from the white paper and having these conversations just to talk to the air. Definitely is for the end game. I think as we move along, it's going to kind of turn into telematics with vehicles. At one point, people would add telematics that for those who don't know what it is, if you stop hard or turn hard or brake hard or also tracks your vehicle and says forward facing and driver facing cameras so you can track your auto fleets. And then all of the data from that is given to the fleet manager. Well, when that first came in play, it was like, oh, that's cool. Glad you did that. Way to have safety culture. And then it went to, oh, you're doing that. Look at the results we're getting. We're having less accidents. We're removing aggressive drivers. We're putting people in training and we're seeing positive results, less claims, less accidents, less problems. And then the carriers go, oh, we'll discount that. And now today, and this is within the span of 10 years, carriers say, if you have a fleet of X size, we won't insure you unless you have that. So I see these visual technologies where people can get another set of eyes and add another layer of safety and improve the overall risk management. I see those type of programs for certain industries working like telematics did, where it was oh, that was neat. Oh, we'll give you a discount. Oh, you can't have insurance unless you have it.
Yeah, what do you feel is the let's say biggest stopper for the industry to translate those operational improvements into measurable insurance outcomes?
For underwriters, they're too busy already. Full stop.
Yeah, that's fair. What do you feel it's taking the most time of underwriters to actually put these things at the forefront?
It would have to come from the top down, I believe. I don't think any underwriter is going to take the extra steps to figure this out on their own. So it would be a directive from the carrier side to look at this type of risk. Maybe if they were pushing for more business for those type of companies that are deploying those technologies, might be a edge in for somebody to invest the time to reanalyze the underwriting. Because somebody has to sit down and redo the math.
Yeah, and from your
AI might
experience,
speed that up, to be honest. Like AI could definitely help them compile the data or come up with their solution faster, but somebody still has to do the work.
yeah, I don't see a world where no underwriters and everything is AI. I don't feel that that's gonna happen. But from your experience, where do you feel brokers and producers spend the most time when placing a complex risk?
Talking to underwriters on the phone. I'm working on one right now. I've probably spent 10 hours on the phone. Still haven't found a home for it. Yeah.
Yeah, it's I would say that time's well spent because you're actually talking to the other human and making things work. And how much time you spend or have you seen spending gathering, organizing, re-explaining information rather than actually advising your customers?
There's definitely a lot of information and paper transfer. I mean, it's insurance. I would say, again, it comes back to the underwriter. There are different quality of underwriters. Some of them are better at retaining and asking the right questions, and some of them aren't.
But yeah, and then you have the component of working with multiple carriers, multiple markets. How challenging is to keep information consistent, let's say, across those submissions?
Honestly, I don't do that part. I have a team for that part of my job. So it's complicated enough that we have a whole team of people that do that job. I set up who we're going to talk to and have underwriter conversations, but then my team handles the submission, the accords, the applications. I just get the information for them.
Yes. So yeah, that's I would say it's a blessing to have a
Mhm.
team that works for you, but also it shows how big of the workload is that we actually need a team.
Very much so.
Now, moving down on the line, how important is for, let's say, reinsurers, that's one step further in the insurance value chain, to understand the actual operational improvements happening at the insured level?
I would say if I'm looking for a tower or I'm stacking, it's very important because it says where they want to go in the stack. If I'm talking to reinsurance, then it is very, very, very risky operations. So I'd want them to have a full understanding of operations. I'd most likely have a conversation with that underwriter so we all are on the same page and we all have the same goals. I'm a big proponent of don't tell me no, tell me what we need to do. So, if somebody really doesn't like something, I'll dig in and say, what about the risk don't you like? Is there something we could deploy to make you be more comfortable with the risk? I want to work with you, Mr. Underwriter or Mrs. Underwriter, to help you feel comfortable. The goal is not to force something down an underwriter's throat they don't want to write. It's to create a partnership with them so we all have the same outcome in mind.
Yeah, everybody wants to price it correctly. I would say that's the ideal world, to know the exact price that's going to work for everybody in the value chain.
Mm.
And do you think reinsurers today have enough transparency into how risks are evolving with this new technologies popping over and over?
That's why we're having this conversation. Yeah, no, it's something that nobody's really talking about, but should be talking about.
Yeah, and looking ahead, how do you think underwriting will evolve as more real world data, more operational insights, new, let's say, liabilities start to appear? People are talking about AI liability and they start to become more and more available.
I think it'll be a lot easier to underwrite these companies. I think things will move a lot faster. I do believe there'll be a discount or a requirement, just like telematics path. I think some of our visual technologies will take that same path because if you have a tool, use it. And visual technologies are getting cheaper and cheaper and cheaper as time goes on. So it's just a matter of economies of scale, and I'm watching things progress together.
And then it becomes a bunch of historical data and you cannot now price it correctly.
Correct.
But no, thank you very much, Kim. I really enjoyed our conversation. This was Inside Delegated Authority with Kim Harkobusic. I'm your host, Daniel. See you next time. Thank you.
All right.
Bye.
Thanks, Dan.